Hello traders, this is Rich Derrick with the market preview for January 8th, 2013. Today we had kind of a back and forth day where we gapped lower, tried to recover most of the gains, but ultimately wound up making very, very little ground in the broad market. Price remains relatively boxed up and in the range of the expansion candle following the congressional vote, and we have yet to resolve that general area. The ES mini futures were a little bit lower on the day, while the NQ futures were a little bit higher on the day. All in all, it's just kind of a mixed session with a little bit of buying and a little bit of selling across the board. We're coming up into the earnings season, which will certainly be very, very gappy. And I would think that the first couple of days of the earnings season will really dictate what we're going to see here fairly clearly. I don't think we're going to continue just to go nowhere. I do think we'll wind up getting a direction here once the first couple rounds of earnings are released. I think that will set a tone for us. Let's first take a look at the multi-comparison chart, where we can see that we definitely have some strength in a couple of sectors here. We've got some decent strength in the BTK issues and also the banks. Both of those were fairly strong for 2012, and we're seeing that spill over into very, very beginning of 2013. At the same token, the SOX index with semiconductors is still fairly weak and tends to lag the overall market, and especially Nasdaq. And we're also seeing continued liquidation in the XAU, where the gold shares continue to be a source of funds to rotate into other purchases. So right now what we're really seeing is more of a rotational market, where one thing's being sold to buy another, and ultimately it just really kind of puts us nowhere. There's really no net buying or selling. The put-call ratio remains neutral. We're still confined between the overbought and oversold thresholds here, so really nothing discernible there. Still waiting for some kind of a climactic spike, but we haven't gotten it yet. Just to really give us something to pivot off of. The advanced declines have been fairly muted, with nothing too dominant since the range expansion candle, and the sentiment survey results are also neutral. So it may take a while before we get some kind of a real move here in the put-call ratio. As we look at our 10-day trend, the 10-day trend also remains neutral. We're just a little bit above the midpoint of the oversold and overbought thresholds here, but really nothing to hang your hat on. So there's definitely plenty of juice left in the tank off of this overbought reading down here for a decline, but at the same time we're nowhere near oversold or overbought. So we could really go either way here if the market wants to take a cue from the first couple of earnings releases that will be coming out. Now the NDX versus the SPX. The NDX being the top number here still is relatively weak. We haven't really been able to break back into this trend channel, into this area where we can have some decent performance out of the overall Nasdaq. And this, unfortunately, really just kind of puts an anchor on the broad market and in the market generals, if you will. If we get a little bit of performance out of the SOX, that would definitely help, and we're just not seeing that yet. So until we get a little better performance out of the NDX, it's really acting as kind of a break on the advance in the overall broad market, represented here in this chart by the SPX. So no change there. Still standing by, waiting for something positive to happen there. Now, this is the one chart that looks a little bit better for the broad market. While it doesn't have support from the NDX, one thing we are seeing, though, is we're seeing a little bit of a rotation out of the government fixed income represented here by the TLT into the SPX, which is our representation here with the broad market. So we do have a rotation that started in mid-November out of bonds and into stocks, which definitely is helping the broad market. And if this trend continues, this is really could be a very powerful source of funds for the overall broad market. Let's take a look at the longer term chart, though. Now here's the same chart, only now we've zoomed from the daily out to the weekly. And you can see that while we do have some improvement here. We're banging up against a level here that really has yet to be taken. Here's a look at the same chart with a couple of trend lines drawn on. You can see that we've got this previous high here that has yet to be challenged and taken out, but we do have the potential here for these higher lows. We need to break this out and get through and pivot up and to challenge this area here. If we get back up above 12.5 in the ratio, get towards 15, we will definitely see some net flows into the markets and really see some nice linear movement that we can really jump onto. But the fact of the matter is, until we get above this 1250 area, where we really don't have any broad, longer-term lasting net movement, I would think that if we do ultimately wind up taking out the previous high in the S&P, which we'll take a look at in a moment, I'm sure that we'll be breaking this out either first or simultaneously. And what we want to do is if this does occur, we want to make sure we have confirmation from this chart. All right, now let's move on to the really good stuff. Now here's a look at the S&P futures, the ES futures in the daily bar. So you can see that we had this test of the 200 DMA. Here's the Friday before the vote. Okay, we kind of recouped that and drove back up here. Here's the gap from the vote, but you can see all these subsequent trading sessions. We got 1, 2, 3 very, very narrow body little doji candles. All the opens and closes are contained within the real body of the day following the vote. So we still haven't done anything to resolve this range, and until we do so, we're really just kind of treading water. Once we do break this range, though, let's be aggressive and make sure we're taking our longs and shorts, whatever they're going to be, full size. This is the prior swing high here. We've got this area right here. If you can see where my cursor is, we still have yet to close and decisively break above that high close. Then we've got to get back up above this 1468 3/4 level here, represented by 6/8, to confirm the new high. Here's a look at the NQ futures, and you can see similar pattern with a little bit more relative weakness. We do have this little camouflage buy signal, today, where we at least closed above the open. It had a little bit of strength, but it's that's very inside baseball. The reality is that we're still much further below the prior high in the NQ side versus the ES side, so there still is relative weakness in the NASDAQ side. Next real challenge for the market is going to be taking this 6/8 level, breaking above it, and then getting up here into this 7/8 level. The 7/8 level is usually a fairly minor level, but I believe in this case it's going to be much more important because it's the origin of this breakdown that we had in October. And you can see we drove up here. We kind of made this little mini head and shoulders. Here's your left shoulder, head, right shoulder. Then we broke down below this 7/8 level, which was the neckline, and drove obviously all the way down here to this 2500 level. But what we really have to do is we got to first take the 6/8 level and then think about climbing up to the 7/8 level. On the other hand, on the flip side, we've used the dirty gap here, this window right here, this prior high, as support. That's definitely going to be minor support. If we close and get down into that, then we're going to be talking about filling this gap. So two things to think about: selling it below the dirty gap window here. We're going to be thinking about filling this gap, and then a break above this prior high puts this 7/8 level at 2773.5 in play. All right, now here's a look at the BTK, which was the top sector on the day. Still banging up against this 8/8 level without being able to really push through it, which is also this prior high over here earlier in October. A couple things to keep in mind: the secret count is getting pretty deep in the countdown. We've gotten our 1 through 9 setup phase. Now we're going 1 through, actually we're up to 11 now in the countdown phase here for exhaustion. So we're very, very close to exhaustion, and only being 1, 2, 3 candles up here in the new setup phase. There's very, very little risk of recycle in the near term here. So once we get into these overbought areas, if we do break out, this is probably going to have a tough time running very far. It'll probably only last for about a week or so if it does break out. Definitely something to be aware of. So if you're going to be swinging these things, it's going to probably wind up being on a shorter term basis. But make sure you keep your stops, relatively tight, and make sure you don't just use the daily time frame here, but definitely make sure you use the smaller time frames like the 65 and the 15 minutes if you do wind up on the long side on the breakout here. BKX posted an inside day, did trade above and settle above the 8/8 level very bullishly for the second time. This is a better looking breakout than what the BTK has to offer, because this doesn't have the countdown that's going to be in the way of holding this back. This very well could continue higher, or possibly up if we get up to this 54.69 area and it get a close above that. That will frame shift this back up and be very, very bullish for this. So this is definitely something you should be continuing to monitor for your longs. This is definitely one of the better looking long sectors. Here's the oil services index, and it remains fairly sloppy. Looks more like looks more like one of the Nasdaq sectors than a broad market sector, being so far below the prior high. Bar count's not bad again, but we're up into this double top area again from late October, and then again if we look back a little bit further into September, we've got the 8/8 level, which was resistance, and we never got through this 243.75 area. Bar count looks okay as far as this push goes, so I definitely would consider this up to the 8/8 level. Here's a look at the SOX, which is of course very, very important to the Nasdaq. Potential big level up at this 8/8 level here, 406.25. Keep in mind that we're 10 bars up now in the countdown, and it could very easily record 13 bars up. If we do record 13 bars up in the seeker, right in the area of this 8/8 level, this could be a really nasty top, and could easily trade back down to the active static trend line here. But let's take this in one candle at a time. We're going to monitor this to see if we can get this exhaustion printed here in the SOX. Now here's the XAU. The XAU continues to be a source of funds. This downward bias is pretty well defined. It's below all the major moving averages, the 10, the 50, and the 200. There's just really nothing to like about this until we can pivot and break back above these averages on a decisive basis. We don't spend a lot of time talking about the currencies. This is really the equity-focused report, but I just wanted to bring to your attention here that we do now have an exhaustion in place for the Japanese yen. This has been on a tear. It's been a really, really nice long trade. We had our seeker exhaustion buy signal over here in September. We noted this move. We anticipated that it would take some time once we got to this point, which was the old 8/8 level, to break through. We thought it would probably need to do some work and consolidate before it really started its next real run. It has done that. It had a really spectacular and very linear move, as they usually are once you get into the meat of a move with the Forex. However, we have now run into the frame shift at 8/8 level. We do have our exhaustion 13 in place here. Here's your risk level at plus 1/8. So this is now going to be into a into a sell as soon as we cross over the 10 EMA on a closing basis, which is right here in the aqua level. So definitely keep an eye on this. This was definitely one of the points and one of the things that was really fueling the market here in a couple of different ways. So definitely keep an eye on this. This looks like as if it's poised for a turn here, and when it does, I think a lot of people are going to be a little bit surprised. So definitely be ready for this. We're anticipating it, and when it does turn, make sure you have your orders ready on the short side in the yen. Of course, as usual, if you have any questions, please feel free to drop by the Trading Lab. You can pop in, you can take a free trial and ask questions in real time to the analysts, and you're welcome to do so. And also, please, if you have any comments or feedback, please feel free to post it on the YouTube channel. We welcome your comments. Again, this is Rich Terry from tradesight, and thanks for listening.